Ethan was an experienced trader. 3 years in crypto futures, dozens of liquidations behind him, plenty of experience. Not a single dollar of real profit. Only losses stacked neatly inside his account history. But he didn't quit, using the pain from past failures as motivation. He saved 3 months of salary and built a $10,000 account. This time he told himself would be different. This time he would turn $10,000 into $1 million. On the day he started, Ethan took it seriously. He drew trend lines, marked support and resistance, studied RSI, watched MACD. He analyzed the chart with surgical precision for nearly an hour. After all that analysis, the final decision was, as always, simple: long or short. But Ethan was experienced. He knew how to manage leverage and position size. Twin-Tex leverage, only 5% of his total capital, a short position. He believed he was being disciplined, careful, professional. He hadn't made money yet, but he already felt like he had become a high-level trader. Somewhere in his mind, he was already imagining himself celebrating success. His analysis suggested waiting might be wiser, but something inside him whispered otherwise. It felt like a perfect opportunity, so he entered immediately. This is it. 1 day later, the market proved him right. The position showed roughly a 5% gain. Ethan smiled and closed the trade instantly. $25 profit. Not much, but enough. He told himself that if he could stack just 0.5% per day, the magic of compounding would make him rich. Then he opened the chart again. Another hour of analysis. Another confident decision. This time, a long position. Again, 5% of his total capital. He admired his own restraint. Yeah, I'm getting good at this. The next day, the market moved against him. The position dropped to 20%. Ethan felt strangely calm. He reassured himself that this was exactly why he only used 5%. Then he doubled down. He added another position worth 10% of his total capital. To an outsider, it might have looked strange. There was no backup plan in yesterday's analysis. No exit strategy if he was wrong. But Ethan didn't notice that. He felt relief. His average entry price had improved. That was enough for him. He even felt proud for not overcommitting the day before. The following day, luck returned. The price bounced. Loss turned into profit. As soon as the position reached 5% profit, Ethan closed it instantly. See, I knew it. He once again imagined his future success. A month passed. Now, Ethan was praying. Every drop in price had triggered another added position. Now there was nothing left to add. No more capital, no more adjustments, only hope. He still believed he was skilled. After all, he had turned $10,000 into $20,000 within a month. His current position was down 30%. He convinced himself that just a small bounce would let him escape safely. The next day, he prayed again. Just this once. Please, let me survive. I'll be careful next time. I swear. His position was now down 80%. To avoid liquidation, he scraped together money he had planned to spend on snacks and prepared to deposit it as additional margin. The following day, everything burned. The original $10,000, the extra $10,000 she earned over the month, all gone. $20,000 liquidated. Ethan felt heat rushing through his head. He couldn't speak. The emergency margin he added the day before vanished with everything else. Rage filled the empty space left behind. 1 week later, Ethan had already found a new strategy. A 3-year veteran trader, now convinced he had discovered something safer. He had no money left, so he was considering taking out a loan. This time, he said it would be different. Instead of just averaging down, he would rotate positions, buying more during dips, selling portions during rebounds. What went wrong in the previous trades didn't matter anymore. He was confident. He believed that trading with borrowed money would make him more disciplined. Ethan doesn't know what happens next, but we do. His story will almost certainly end in another liquidation. So the real question is this: what must we do differently to avoid becoming Ethan? More advanced chart analysis? More careful position sizing? Neither. The answer is not inside the trade. Surprisingly, the answer exists outside of it. The answer comes in the next video.